Welcome back to the Eric Krown Crypto channel, wishing you a happy early start to this Friday morning. It's a Friday dumbola. Start off your damn week with, or end your week with a damn dumbola. And it's time to panic once again, my friends. It's time to panic once again as Bitcoin heads down about $1,000 or $1,500 right there. Anyways, with that in mind, I wanted to follow up on this analysis as we were looking at yesterday as Thursday, the most likely day to dump out. At least that's what my studies have shown for the past 3 months. In a more serious tone, we also were looking at the 5-day Gaussian channel as still suggestive of downside risk as long as Bitcoin is below the mean band. So we'll update on that. We'll update on the short-term timeframes and also kind of juxtapose that against the short-term as well, as there are a few setups potentially emerging. And then also, before we get into it, I do want to show off one of the app features right here on the events tab, because there are several Fed speakers speaking today, of which you can find this for yourself on the Krown Trading application, and you can even set alerts for yourself as well just by clicking this button over here, which makes things really nice and easy. Anyways, so markets probably do move around during those times, as you typically would expect. Anyways, let's just jump right into it now. As you hear the toilet flush in the background, it's definitely not Elsa shitting. Anyways. It's like little rainbows come out and puppies. Anyways, yeah, 5-day time frame over here. This was the mean band, which once again rejecting price action, the middle line right here that you can see. And I have the same thing to say as before. As long as Bitcoin is living below that mean band, there is risk of further downside. Now, I don't want that statement to be taken out of context here, because in the short term, probably more likely to bounce than not, as we'll talk about a little bit later. But on the higher term time frames, perhaps throughout the rest of the next few weeks, yeah, downside risks still do exist, and potentially even as low as the bottom end of the 5-day Gaussian channel right here. In that case, that would also fulfill a retest or a gap fill from CME's breakout that we did see a couple months ago, actually on Friday the 13th. So do keep that in mind. That would be kind of like mid to low $20,000 territory. But based off of the higher term time frame macro analysis that we've been looking at on this channel, both on Tuesday and then basically for like the past few months now on Sundays, I do still think, or at least the probability statistics would suggest that the macro lows are in, and wherever this dump kind of finds its footing is likely to be a higher low, whether that be here or maybe even all the way down to $20,000. That remains a question, obviously, but what I can say is that downside risk will exist, and it rhymes, so it's fucking true, as long as Bitcoin is below the mean band right here, which is now 23,500. So keep that number in mind. The 5-day will close in another 3 days, so not anytime soon, obviously, but if Bitcoin can pump back above there in that time frame, that would be a really good indication that we're going to see the rest of March, maybe even April, work its way into the deeper $20,000 territory, like 27, maybe even $30,000. Anyways, moving on now, I want to follow up on the shorter term timeframes. Yesterday, we were looking at first the hourly actually as beginning a short term downside move below 23,300 is what I'm trying to say, down to the overall range lows at 22,800. Obviously, that did happen, and then a break below there, which happened obviously as well as getting another continuation move somewhere down around the bottom side of the 80% of historical returns range lows here on the HPDR indicator, which is where Bitcoin's kind of found its current footing in the short term, just below $22,000. This also is in alignment with the daily time frame as well, showing the bottom side of the 50% of historical returns range lows at about on a closing base at about 22,200, I think. Yeah, 22,200 it looks like. So what's more likely in the sort of short term? Probably going to see a bounce off this region. I mean, obviously we're already seeing a bounce off this region. I mean, Bitcoin's popped up about 400, 500, 500-ish bucks off the lows. Not bad. But here's the thing: there may be another setup emerging that would be suggestive of a greater bounce off this lows. But before I get into that, I do want to fully address the prior point in the sense that both the 4-hour and the daily are pretty much pivoted at the same regions. The 4 hour is going to be the 80% of historical returns range lows, whereas the daily the 50. But if you do start to see closures below this region, which again on the daily is 22.2, 22.2 is what I'm trying to say. That's at the point where, I'd be looking for the next, major move to the downside, if you will. With bounces along the way, probably somewhere around this last prior low. But, on the daily, the 80% of historic returns range lows, which is right here, guess where that is? That's low $20,000 territory. So that'd be in alignment with the 5-day chart that we're looking at over here. So that risk would exist or be relevant, again, if Bitcoin closed below that. just to be 100% clear. Anyways, to juxtapose that against the short-term timeframes, I do want to go back on over here into the hourly and speak about the hourly for a second, as the HPDR indicator is likely setting up, or I shouldn't say likely just yet because it's not quite there, but there is a strong potential for a setup to emerge today. But it's actually not there right now. Anyways, we see several closures below the blue 50% of historic returns range lows starting right here. And that then initiates a second condition for a setup for a bounce, which we can go and scan the volatility indicator for a decrease or a contraction in volatility, of which probably going to get that sometime later today, because guess what? It literally maxed out all the way at 100 percentile. So once you get to 100 percentile, like, it's pretty fucking difficult to keep it at 100 percentile. Like, obviously, that's just mathematics, right? Beautiful statistics here. So, if you see Bitcoin kind of oscillate within this region and do something like this, and then volatility decrease, a few closures, that's at the point where it's more likely to see about a 2% bounce than not off the lows, which 2%, from this region here would put Bitcoin back at around kind of close to the breakdown region, somewhere around like 22.6 to 22.7-ish region, depending upon where that setup would emerge from. So theoretically, we don't have it in right now. So it's just, it's I'm getting way ahead of myself, but obviously it's going to happen like intraday if it happens. So, if you do have the indicator, you can reference it then. So yeah, the reason why that is very important is because we'll go over here on the 4-hour time frame and we'll notice that the breakdown of the 50% of historical returns range lows was at about 22,700. So it's great confluence right there. But wait, that's not everything. It's like, wait, that's not it. The more important thing is what we're going to go over a little bit later. In fact, let's actually go over it right now. Let's go over it right now, and then we'll get to stochastic momentum at the end of this video. So this would be the 12-hour Jewel Light setup that we were looking at for the past few days here, or basically since like the 26th of February when it fired off. What is the setup? Well, the setup is this. 12-hour Jewel Light getting below 35 and then turning white on the first tick initiates a higher probability of a move to the upside than not before stop losses hit, basically. In fact, if we use the built-in trading view strategy tester, let me just bring this up a little bit more. These sort of stats would be more relevant. 71.5% strike rate for an upside move with a probability factor of about 2. So where does this get invalidated? Well, as we spoke about many times over the past few days, it gets invalidated on a 12-hour closure below 22,700. That would be exactly where the pivot is right here, and kind of in alignment with the potential bounce on the hourly time frame as well. So if Bitcoin pops back up and closes above that region on the next 12-hour closure in about 4 hours, it would actually still suggest that Bitcoin's more likely to trade sideways and then up above $24,000 like sometime around early next week. In fact, if we go back to the strategy tester for this particular setup, about 18 bars on average in these in these setups. So 18 would be 9 days. We've already seen about 4.5 days go on. 9 days would put us at about Tuesday. So it's going to be some variance in there, but basically what I'm trying to say is that if you see Bitcoin pop back above that level and then hold sideways for like another 2-3 days, that's at the point where, hey, it's probably more likely to actually trade its way back above $24,000. So yeah. Anyways, yes, now let's get into the last part of this analysis. I want to go over stochastic momentum and just see where the pivots are right now. Yesterday, we were looking at heavy pressure to the downside, which from stochastic momentum, which was giving a bias towards the downside, which daily still having heavy momentum to the downside as long as Bitcoin's below 23,700. So probably not changing today. 12-hour time frame is also going to be showing downside below 22,450. Right now, Bitcoin's about $50 away from that pivot. 6-hour time frame is also showing downside pressure below 23,300. 4-hour time frame is also showing downside below 22,620, and the hourly is probably going to be showing up if I had to guess. Yeah, it's going to cross the upside above 22,350. So, short term, best case for Boulos, in my opinion, is probably a bit more sideways like this, and then the HPDR fires off, and you get that bounce back above here. And then the real question is the 12-hour close above that level or not. If it does not, well, okay, it's time to consider some actual downside. But until then, kind of remains to be seen, obviously. So you can see how an indicator like this works. Beautiful statistics, obviously. And yeah, I think that's basically it for today. So I will be signing off on that note. As always, I want to be showing the old ByBit there. They got a 0% on maker fees for derivative contract orders promotion with the link in the description below. I believe it's only available with my link. It's in a more serious tone. I do think that that's a pretty fucking good promotion because, like, for anyone who's trading more actively, like myself, and I know a lot of people in this community, it's just more money in your pocket, obviously. And we're also working on another promotion with ByBit, which will maybe even be more reductions in fees. Oh, wouldn't that be nice? Wouldn't that be fucking nice? They're actually quite receptive, which is really, really cool. Anyways, other than that, I want to be wishing you the best as always. Take care, much love, and see you hopefully soon.